Obviously, there are feedback loops here. So just as all this happened and we got that reflex reaction, maybe an exaggerated one by the markets, the market implied inflation expectations came down quite a bit. We did get a lot of the sort of crowded positioning in the cyclical and value assets cleaned out probably last week. So in a sense, maybe the markets have bought the Fed more time because we no longer seem like we're in that mode of over anticipating an inflationary burst here.
That is certainly one interpretation. And I just joked on Twitter, if you want to start a really heated discussion among economists and market participants, ask them to explain what just happened and what's ahead, and you'll get lots of views. These are very technical markets right now, and we just got to respect that they are technicals and see that go through, and then we'll be able to be in a better position to assess what's going on. I think the concern that you still have out there, and the reason why longer-term inflation expectations came down, the reason why the 30-year moved in a major way, the yields came down in a major way, while the 5-year and the 2-year went up, is that there is a concern still out there that the Fed may have to slam on the brakes down the road, which means that you'll get more inflation in the short term, and you'll get the risk of lower growth and inflation coming down sharply in the long term. That risk is still there, Mike.
Mohammed, would you touch sovereign treasuries at this moment, especially the longer-term ones?
So I wouldn't, but I understand why some people may feel compelled to do so, and I certainly wouldn't after the move that happened on Thursday and Friday. I think that I certainly am optimistic about the longer-term growth of this economy. I do think this economy is going to run a little bit too hot on the inflation side. But I'm not willing to say the Fed is not going to adjust in time. There's still scope for the Fed to adjust, but they got to get moving in a more serious way.
Shepard Smith here. Thanks for watching CNBC on YouTube.